Hi, I'm Mark Allen, partner and co-founder of K3. In this presentation, I want to go over some possible causes of stagnant growth and walk you through the essential components of a corporate development strategy. As stated in other videos, I have seen and worked with smaller federal contractors that have a truly remarkable proficiency for business development and generating sales within the government market. However, it is rare that a company ever gets above 10 or even 15 million in revenue. And even if they are fortunate and hit the $30 to $40 million range, we still see a constant unfamiliarity among smaller federal contractors when it comes to capital formations, strategic acquisition models, and true corporate expansion. Despite their marketing proficiency within the government, when we ask these companies a simple question such as, "What is your growth strategy?" it is rare that we ever get a straightforward answer, let alone an answer that actually makes sense. Now, I have been working in the private sector since my separation from the military, and I have seen some of the most undisciplined and fundamentally weak companies make it big. And the most frustrating part of all is that I have never witnessed a segment of companies more poised and worthy of investment capital than smaller federal contractors, especially ones that are veteran-owned. You combine the advantages of a competitive business status, having little to no debt typically, being profitable, having sustainable revenue through contracting vehicles, and a disciplined management structure. These are highly valuable characteristics to any investor. Realistically, K3 believes that small businesses in the federal market should have a line of highly intrigued investors anxious to capitalize these companies for growth. Unfortunately, that is rarely, if ever, the case. So why is that? For the most part, this market segment has been basically ignored by the financial and investment communities. There is little desire to educate and work with this group on corporate structuring, capital raising, acquisitions, you name it. So if you don't know your options or even where to start, how can you achieve the growth you desire? Somebody please, let me know if you've received a call from Goldman Sachs this year. Yet your company is probably much better positioned for growth than most of the companies they work with. But the market continues to pass you by, either because they can't communicate with you, don't understand your potential, or simply don't know you exist. Commonly, most investors' attention has been in the commercial sector, whether it's high-tech, new innovation, software, you name it, typically because these industries have a history of rapid growth and lucrative returns. The major failing point of these capitalized companies, however, is that they did not have a strong foundation, they were almost always working in the red, and rarely did they have a strong pipeline and strategy for revenue growth. Virtually the complete opposite of federal contractors. Well, given our background in the investment community and after years of involvement in the federal government, we saw these shortfalls as a real calling to teach and assist smaller contractors wanting to move to the next level. So we designed our company, K3, to be a real bridge of knowledge and execution for such companies who seek to achieve successful corporate expansion. Our strategies are designed to create better and more practical options, demonstrate how to increase a company's valuation, and develop an exit strategy that ownership is truly in control of. Well, let's look at some of the basic building blocks of a growth strategy. Now, we're assuming we've already answered the question, what do I want my company to be? Let me just touch on the components that answer how we can get there. In virtually every circumstance, there are 4 vital components necessary to achieve corporate expansion. Number 1, a comprehensive strategy to drive revenue and expand markets. Never, ever, ever let your top line stop growing. Never stop trying to get into new markets. It is so disappointing to see great companies get on a highly lucrative IDIQ that sets them up for the next 5 years and they just sit on it. Even worse is relying solely on an 8A status to get revenue. Keep in mind, if you're not growing, you are dying. That's not meant to scare you, but instead stress the important differentiator between companies that achieve long-term sustainability and those that refuse to innovate and eventually fade off into the fog. Number 2, an acquisition model to fuel growth. I'm not taking anything away from organic growth. I know how difficult it can be and how most companies want to keep their success in-house. But unless you want a 25-year growth strategy, you should have an acquisition model in mind. We'll touch more about acquisitions in later videos. Number 3, a dynamic marketing campaign that increases value through awareness. The vast majority of smaller contractors, especially veterans, prioritize marketing efforts just above fixing that leaky faucet in the basement sink. But you have to understand, the term marketing has changed dramatically just in the last 5 years. Thanks to the internet and social media, our attention span has gotten extremely short. Even if subconsciously, if something is not constantly in front of our face, or if the company just doesn't have that feel of being credible, we dismiss it. Whether it's a lawnmower, a home security system, or a company seeking growth. Just think to yourself, what is the easiest, fastest, and cheapest way to increase the value of your home? It's pretty simple. Paint it. Cut the grass. Make it look nice. I'll go further into marketing in some of our other videos as well, but it's important to understand awareness and perception drives value. And number 4, a solid capitalization structure to execute and expedite these other strategies. No matter how great a company is, how profitable they are, there will always be a need for capital to truly expand. Having a compelling strategy for these first 3 components dramatically increases the amount and probability of investment capital. Having a strong funding structure allows you to address these other efforts with sincerity and purpose. So if you're looking to expand or grow your value, you absolutely have to have these 4 components in your growth strategy. Every single large company in the market today, outside of companies like Facebook or pharmaceuticals, have definitive strategies for each of these 4 components. And as you can see, it makes sort of a growth table or platform. Each component must be addressed with the same effort or the growth will falter. Also, just knowing what these characteristics are is sometimes not as important as when these strategies are executed upon. The number 1 reason that even a well-formulated growth strategy was not successful or not as successful as it could be for companies was because they attempted to address key factors at different times. For example, some companies will strive to meet a certain sales goal like 10 million in revenue, and then they go out and try to get capital. Or they look to raise capital now based on their past history, and once they do, they then look to address the other components. In almost every situation, the consequential effect is that the company takes 3 steps forward just to take 2 steps back. So unless an unintended event or really miracle happens, the growth of the company either falls, plateaus, or is not as significant as ownership desired. We encourage you to view our other videos, specifically the video that discusses uncovering your true value and how to increase the valuation of your company.